Good evening. Hey, what's up? This is Brian Kuzmar with Commercial Rare Coins and Precious Metals and ConciergeBullion.com in beautiful Lauderdale by the Sea. Got the live John Pennekamp live cam, underwater live cam up right now. I don't even know how or where they maintain this camera, but it's pretty cool. Lots of cool corals down here and tropical fish. Took a look at my local camera, a little bit too cloudy to look at, and the beach looks like it did yesterday. So, hey, let's take a look at a couple things I wanted to talk about first, which is, are we possibly looking at another Lehman moment coming down the road here? Pam and Russ Martins in the most recent GTorg article talks about trouble with Credit Suisse causing panic amongst banks. And as you know, that was a catalyst. Of course, when Lehman went down, it was kind of a domino effect. It was a catalyst that caused other banks to go down. And very similar circumstances we could be looking at right now with Credit Suisse. The Swiss global bank Credit Suisse, a derivative counterparty to major Wall Street banks and U.S. insurers, raised alarm bells in markets on Fridays and is raising more anxiety this morning. Its 5-year credit default swap measurement of its risk of defaulting on its debt jumped to 250 basis points on Friday and traded as high as 350 basis points in early trade today. You know, there's a lot of smoke going on there, folks, and where there's smoke, there's likely fire. So this could be a big, blame moment. Let's blame, you remember everything was blamed on Lehman. That's why they call it the Lehman moment, right? It was all blamed on Lehman, but the truth of the matter, it was just over speculation by big greedy commercial banks that were out of control and fueled by a Fed bubble, all that kind of stuff right there. It wasn't Lehman. Lehman was just the first one to get caught in the bubble, okay? But Credit Suisse looks like they're getting into a similar situation right here. The big move in the CDS on the Credit Suisse is further impacting the price of its common stock. The shares closed on Friday in New York at $3.92, just pennies away from its all-time low. Oh, that's not good. Then dropped another 11% in early trading in Europe today. When a major derivative counterparty begins to see a blowout in its credit default swaps, that affects the stock prices of all major Wall Street banks with significant exposure to derivatives. Again, i.e. same kind of deal that we were looking at back in 2008 with the Lehman moment. Will this be the Credit Suisse moment? Will Credit Suisse have this default and this giant collapse in the market blamed on them like Lehman Brothers did? Sure looking that way. Something to watch for sure, and let's see what happens here over the course. And this ain't going to take too long to happen if this is indeed true. This will kind of cascade pretty quickly here. It also raises risk of the systematic contagion as occurred in the financial crisis, of course, what we just said, of 2008, when the Citigroup and Lehman Brothers were teetering and were major derivative counterparties. The chart with this report shows dramatic declines is not just Credit Suisse over the past year, but Nomura, Deutsche Bank, who we've known been in trouble for a while. Funny enough, Deutsche Bank, one of the big manipulators of gold and silver as well. Bank of America, wow, another gold and silver manipulator. JP Morgan, God, they got the freaking list of scumbag commercial banks out here, and Citigroup. All right, that's just my opinion, of course. Good article here in GATA.org. Pam and Russ Martin's trouble with Credit Suisse causing panics among banks. And by the way, I haven't said it in a while, but if you are a new stacker, you're new to my videos, and you don't, GATA.org is free to read. They talk about the basics and confiscation and all this other stuff right here. Confiscation is something I've talked about a lot as well. You don't have to worry about that. No one's going to confiscate your gold or silver. They're too stupid to do that, and there's many other reasons, which I've explained many times before. But GATA.org, a great site to have bookmarked on your browser or your web page, your browser here on the interweb. All right, here, quick sip to, by the way, evening wine report. Looks like it's about 80-something degrees out there. A little wave. I wish I went surfing this morning. I should have, because there was a nice little wave coming in. But right now, really quiet out there. It looks like it's just the traffic of the locals going home after work. Haven't seen the tourists, man. Where are the European tourists that we get here this time of year? They're not here this year, folks. So I can definitely tell you that there's big problems going on in Europe, but I digress. Another thing I wanted to talk about it is we're going to hear a lot. You're going to hear a lot. Well, gold is down, silver is down because of interest rates are up, and the Fed is increasing. Is tightening, and they're going to increase interest rates, and that means that treasuries pay more and bonds pay more, and those other things will pay more. Well, let me tell you the fallacy of that. Sorry, I had to take another sip. I didn't croak and fall over. This is the chart, gold versus real yields, all right? It's a pretty cool chart. For all intents and purposes, I could believe this chart if it wasn't reading that we were, and correct me if I'm wrong, but this is treasury yields right here over the course of the years. Now, I can't tell you about the data here, but I can tell you that there's no doubt in my mind that we are not at a positive in treasury yields. It says real 10-year treasury yields 1.54%. And again, a lot of trading algorithms are based on this. This graph is based on official data from the U.S., from the Fed and Treasury, or whoever puts out this type of data, probably the Fed. And according to official data, 10-year treasury yields at a positive 1.54%. And this could be bad for the price of gold and silver. Maybe 1.54% unlikely, because it's such a meager amount as far as a return goes. But again, this is based on real rates. Now, the problem with this is when again, the algos on gold and wow, I'm running down the rabbit hole here again. Gold and silver prices are derived in the COMEX markets, the CME group markets. And let's take a look at here. CME group. Here's the CME group. I call them Crimex, because in my opinion they own the casino where gold and silver prices are made, and other commodity prices are made as well in the futures markets. Okay, I call that a casino, and the players are the big banks and the big managed money that come in and play these markets in the COMEX. And there we go. There's the CME group right there. There's the people that run that crooked casino, in my opinion. World's leading derivatives marketplace. That actually tells you everything right there. But this is where gold and silver prices, corns, oil, and everything else is made up of. I'm telling you, folks, it's just plain crooked. The marketplace here is not made up of CME groups. Silver and gold markets are not made up of fundamentals, real fundamentals, supply and demand fundamentals. They're made up of derivatives. They're made up of large naked short positions, is I guess what they used to call them in the old days. A lot of running up prices and then running them down by the big commercial shorts. But I'm starting to digress a little bit here, and I'm getting off the track because I was talking about real rates. And how did I get off the track there? God, it's easy. There's so many rabbit holes that you can just fall into when you start talking about real yields versus gold. And God, I started going down the rabbit hole of how the prices are fixed in the COMEX markets. But what we're really talking about here is gold versus real yields. And let me read this right here. I'll get back. Well, God, what we were just talking about is how they're rigged. I talk about all the time. The chart above plots the price of 1 ounce gold and the inflation-adjusted 10-year Treasury yield. The real interest rate is defined as the difference between nominal interest rate and expected the real yield in the chart above is calculated by subtracting. So basically what they're talking about is that they're using the, well, hang on, let's go down here. In other words, when gold goes down, when real yields go down, gold goes up. This correlation explains why inflation is gold's best friend, while rate hikes are its worst enemy. Here's a possible explanation for this relationship. Rising interest rates also mean rising opportunity cost of holding gold. Gold neither pays dividends nor interest. Thus, it is relatively expensive to hold in a portfolio when real interest rates are high. On the other hand, when real yields are negative, holders of cash and bonds are losing wealth. In such a scenario, they are more prone to buy gold. All right, and that exactly makes sense. It's true. If you were able to take your money and park it somewhere, and it was able to pay you a dividend, a yield plus guarantee what you've already got invested into it, that may be better than gold. given that nobody's buying gold, nobody cares about gold, and other scenarios that I've not included in here. But the truth of the matter is that gold is not based on. I mean, the interest rates and the real yields right here that we're seeing are not correct at all in any manner, because what they're using to determine that we are at, what does this say right here? That we're at 1.5% positive, 1.5% positive yield on a 10-year Treasury. But that's not true, again, because they're using the inflation data from the Federal Reserve, the official inflation rate data, which is substantially less than what reality is. They may be showing, what is the official inflation rate? Put it in the comment section if you know, but I'm assuming it's around 8 or 9% or something like that. And they're assuming, and everyone's assuming that that's correct, but it's not true. The real inflation rate is much higher than that. So real interest rates are certainly not at 1.54%. In fact, I'd venture to say that they're probably more like minus 10%. All right, man, rabbit holes, and it's easy to kind of run into them as you're talking about all this stuff. Gold and silver and platinum prices. Gold like 1716.97 right now, silver at 2067, and platinum at 1919. I think we were sitting at what high of 1728, as we can see here. Let me take a look down here. Yeah, 1728 and 2109 as a high in silver. Backed off a little bit in the overnight markets last night, 1998. Platinum currently sitting at 1999. Again, above that $900 mark. Where was the low here? 903, it looks like was the low. All of these prices, even though they're up, folks, represent what I believe to be a really great deal in gold, silver, and platinum prices. And of course, at the lower prices, it was even a better deal. But every time, if we see more dips from here on out, my recommendation is just, and again, my opinion is just to keep buying these dips. These prices are artificially kept down in the criminal CrimeX CME Group markets using contracts, paper, derivatives, and everything we just talked about the last few minutes. All right, something also I have noticed, look, in the red, and guess what else is in the red? Why? Why has gold, and of course wherever gold goes, silver will follow, but why has gold in particular been, seems like it's been following the NASDAQ, S&P, and Dow Jones markets? Again, why? Well, because I believe that the big commercial crooks that control the gold and silver markets right now, they have big commercial short positions right now in gold, not so much in silver as Ted Butler talks about, but I believe that they use, again, moving 50-day and 200-day moving averages, and they use the down in the stock markets and the not so much the stock markets, but the idea that the rising rates, which we just talked about, has a significant impact on gold, which it doesn't in reality, because reality of real interest rates does not match what they show as the official rates. And again, that's what we just talked about right here. Official rates would have you believing that treasuries are positive at 1.54%. But if you factor in, again, the real inflation rates are what we're really looking at, not the official rates, it's much less than that, probably 10% less. Peter Schiff talks about this recently in one of his articles. All right, man, so many things to talk about. It's so easy to get sidetracked in this stuff. And I probably should just stick to the precious metals and avoid talking about the Fed anymore, because the Fed is just a distraction. Gold and silver prices are not based on what the Fed does right now. That would be real fundamentals. Gold and silver prices are dictated by a bunch of crooks in the criminal CrimeX markets. All right, what are the best deals out there? Folks, frickin' price of gold eagles and gold eagles, silver eagles, 90% have just went stupid. Stupid. Gold eagles especially. I didn't see, a shortage in certain gold products, and I wasn't seeing that the premiums in gold eagles and things were rising dramatically. In fact, they got a little bit reasonable for a little while at 145, 160 on the wholesale level. But now, and even lower for some point, but now gold eagles on the retail basis are well over $200. Stay the hell away from them. Gold 1 ounce bars in cards Valcombi bars and those kind of things are still the best deal out there while the availability still lasts. I have a feeling, though, rising demand for gold and, again, supply and demand. Less supply, more demand. I believe that even the price of these gold bars are going to start to go up here pretty soon. But as I can tell right now, you shouldn't be paying more than spot plus $74 for gold and the 1 ounce gold bars and cards. And those are the best deals out there. Again, what would 1 ounce Eagles be trading for? Let me see here. I suspect, gosh, they got to be in the $200 to $230 range, which is just insane, folks. Stay away from gold Eagles. Silver Eagles have got to be, and let me just take a look here. I jotted down a few numbers here, and let me see where those are at. Wow. Wow. The Silver Eagles got to be at least anywhere from $13 to $15 over spot right now. Stay the hell away from them. Best deals out there are kilo silver bars. I've got a great deal on them, by the way. And heck, I might as well get my advertising out of the way here real quick too. I advertise to beat APMEX, SD Bullion, and JM Bullion. All three of those companies are great companies, and that's why I use them as examples of prices that I can beat. So if you're looking to buy any types of gold, silver, and platinum, and you're in Florida and you're near South Florida, and you can visit us at Commercial Rare Coins and Precious Metals between the hours of 10 and 4 Mondays through Fridays. I'll beat the locals. I'll also beat the big boys online as well. If you don't live in the state of Florida, make sure you give me a call, because we do phone sales. And we do sales anywhere in the continental U.S., but it has to be over 100 ounces of gold and over 2,500 ounces of silver. You can call us at conciergebullion.com. I'll get to that in a moment, and I'll show you the websites and the addresses for that if you're interested in doing business with us. But meanwhile, folks, still stick with those low premium products when it comes to gold and silver, as I've been talking about, like a broken record for months and months and months now. Yesterday's video, explosion in silver and gold prices. Thank you, Marcelo, for picking out the word explosion. I was hoping we didn't have an implosion today. But explosion, we did. We had a really kind of rocket to the upside there with silver up over $1 something. Gold as well. Based on the BOE kind of reversing course. And again, I'm talking about central banks again. What does that have to do with the price of gold and silver? Really nothing, because gold and silver are just manipulated markets. Man, I got to stop talking about rate, the up and down of rates and stuff, because it really, if we were living in a world of real fundamentals, that's what we would talk about, and that's why gold and silver would go up and down. Real rates, treasuries paying real rates. That's, but again, the data's so screwed that you can't trust the real rates. And the other thing too is that the COMEX market is so screwed. Man, that's a double screwing. I'm even confusing myself here. Well, let's talk a lot. Explosions in silver. I talk a lot, yeah. Explosions in silver and gold prices. Close your eyes if you get dizzy. Let me answer some comments here and take a quick sip. Okay, Silas, let's see what you have to say here. They definitely don't want gold to go up, as that shows a weak dollar. Correct. And man, what a beautiful evening. Lots of people taking walks tonight. Lots of beautiful people taking walks tonight. They will do things that people wouldn't believe to keep gold down and the dollar strong, all in the name of national security. I agree with that 100%. Wow, you pretty much nailed it there. To think that there aren't think tanks and propaganda being spread as well as markets manipulation is very naive. Some people see it and blame just the banks, but the government has their hand in it too, much more than just looking the other way. But they can do only so much for so long, but it is a war to them. Silas, you kind of summed it up in a couple paragraphs. You summed a lot up in a couple paragraphs. And again, so many rabbit holes we can go down to. And really, how much effect does the Fed have on the price of gold and silver? Well, you'd like to think it does have a lot of effect, but really these markets are so dominated by, again, the big commercial banks in the COMEX, CRIMEX markets. And regardless of what, in reality, gold and silver, based on the current inflation rate and based on what's happening in the world, gold and silver should be double and triple the price. In reality, based on real fundamentals, but it's not, because we're not living in reality. We're living in a fucked up a manipulated ass market, again, in the COMEX, CRIMEX markets, where the price of gold and silver is made. All right. Again, oh gosh, I talk about this so much, it just like burns a circular hole in my brain. I checked First Majestic report, AIC report, was 1679 to 1806. 2022. Oh man, I kind of lost you there, Stephen W. I'm sure that's great data, and it was something I talked about yesterday. But I just got brain fog all of a sudden. Maybe it's the wine, but 3 sips of wine give me brain fog. Boy, I'm getting old, huh? Charles Yang, pullback is coming. Ooh, good possibility. Never underestimate these crooks. That could possibly happen. And Buy Stock says yes, it already has today. To some degrees, it has. Let's see what happens from here. But again, buy those freaking dips and buy the physical bars, folks. That's where the money's at. And let's move along from here. Where are we going? EU is cracking. China next. Thank you, Eli. I appreciate that. Fed flipped. Amazing. No one does see how did interest rates drop so much? Fed only does. Fed talk. We've been talking a lot about Fed, Rich 5310, and I agree. It's easy to get into the Fed talk, and if we were living in a world of real fundamentals, interest rates would mean something to us, or this data would mean something to us. Inflation would mean something to us. But the reality of the situation is the inflation rates are much higher than what they're reporting them to us. And what else? Oh man, there's so many people walking by. Very distracting. All right, let me move along here. Spot on info. Paper pushers are dealing in pennies. Don't let that fool you. I saw you a contract 5,000. Yeah, exactly true. And again, it's the CRIMEX. Marcia. I mean, it's the same people I talk about all the time, day after day after day, for the last 600 videos I've done. And you're exactly right there. But meanwhile, as Ted Butler says, I think it's going to blow up in their faces pretty soon. Keep stacking, keep buying this ridiculously low price silver, priced low by these crooked commercial crooks. Crooked, is that double negative? By these commercial crooks that are just providing you metal for on sale, fire sale prices. Wilfred Vasquez, what's up? Thank you very much. Andrew Wilcox, you as well. Oh, by the way, we are on Rumble. I'll talk about that at the end of this video. Yeah, I know. That's a kind of a little bit interesting right there. They do, but they do what they do, and it's their business. They can do what they want, and again, you don't have to buy from them, and I agree with that 100%. We can all, again, that's what I love about freedom of going to different places and freedom of making my choice where I want to make my purchases. Is exactly the reason you say there, Dirty D. Timothy Lear referenced exactly. Tree Climber, hope everyone is enjoying the silver ride. I am. Thank you, Gary. Appreciate that. Enjoy the Dream Life says, if you want to see your channel grow, leave all comments. I do leave all comments. The only comments that we delete are the porno guys and the crypto guys. It's funny, porno and crypto, I don't know how that goes together. But porno and crypto, they're the only ones that we really delete out there. And I think maybe a couple times we've deleted people that were just plain nasty and rude. For no other reason being nasty and rude. But I agree 100%. I don't edit. I don't censor any of my comments at all. Again, except for the porn and the crypto scammers and spammers. Michael Matthew, thank you. And John Gordon says, if these assholes can pull a canary out of their arseholes and pull another shit from it, then I'll be a monkey's uncle. John, remember, John, you've been saying it yourself for a while. Don't underestimate these crooks. They could pull another downside, but just look at it as an opportunity to buy gasoline at $1 a gallon. All right. Silver to 87 by December. Whew, gosh, don't jinx us. But I think we could see some highs coming up here real soon, folks. There's some strange shit going on back in the background. Well, think for yourself. Question authority. It's hump day. I'm going to get out of this video pretty quick here. And by the way, thanks, folks, at Rumble. I appreciate Rumble for hosting my videos as well as YouTube. And you can find us there, too, on Rumble. And I'd like to thank the viewers out there for watching as well. It's just commercial rare coins there. And where do we go here? Also like to thank the Wall Street silver stackers out there. You Wall Street apes, keep stacking. You're doing a great job. Love your forum, and also appreciate the moderators that allow me to post my videos out there as well. I think that's it, folks. This is Brian Kuzmar with ConciergeBullion.com. in beautiful Lauderdale by the Sea. If you're buying more than 100 ounces of gold, more than 2,500 ounces of silver, and you live anywhere in the continental U.S., please give us a call at conciergebullion.com. You can find us online at that, again, conciergebullion.com, or you can just call us at this number right here, which is 954-302-2046. If you live anywhere in the state of Florida, come to our brick and mortar store, which is Commercial Rare Coins and Precious Metals. We're open 10 to 4 Mondays through Fridays. You can call us at any time at 954-493-8811. We're open 10 to 4, again, Mondays through Fridays. Brick and mortar. What was I going to say? We advertise to beat APMEX, SD Bullion, JM Bullion, and all the big boys out there. So give us a try. Love to do business with you. Again, thanks for watching. Have yourself a wonderful evening, and let's see what happens tomorrow. Bye now.